What is up, guys? Welcome back to my channel, and today we would be discussing one of my favorite equities and a stock which has been performing at an incredible pace throughout the past few quarters. We'll be discussing Spotify. It's been an incredible run with a year-to-date change of 65%, and it's now trading over $760 per share. If we take a look at the key ratios and other important metrics, we can note that it's music to our ears because the profitability is there and the return on equity is at a solid 24% and going up, while the return on capital is at a better 27% and going up. Now, if we take a look at the debt which the company has, the debt to assets is just at 17%, while the debt to equity is low at 38%. Moving to the valuation, we can note that the valuation is not low. And in fact, the current price to future cash flow is trading at 50x. That shows that the company is indeed not cheap, but notwithstanding the opportunities ahead are there. Revenue has always been up and steady, but the earnings per share was literally negative up to a few quarters ago. In fact, up till the end of 2023, the company was literally running at a loss. And it was only in 2024 when things were changed around, thanks to a cut in the number of people, so it reduced costs, and also focused a lot on the premium segment in which it maximized the revenue and ultimately increased magnificently the profits. Note that most equity analysts already price in the incredible growth which Spotify has witnessed. In fact, the return potential is currently at -8%. So most of it is already priced in. But if we take a look at the consensus rating, 91% either indicate that one should hold the equity or buy more. Of course, I am part of the latter, so of course I buy more. After looking at the past data, we can now look at future indicators, and the future for Spotify is indeed very positive. The streamer has 268 million premium subscribers and 678 million monthly active users. We've seen increases now being initiated in Europe. The number of listeners keeps going up, the base keeps growing, and the number of premium subscribers keeps going up. Ultimately, the company also dwarfs Apple and Amazon with 1/3 share in the streaming market share. So the company literally has a huge percentage whereby it's in control. The total number of paid subscribers across the globe is growing at an astonishing rate. And this, of course, also includes Spotify. So as we're seeing here, the CAGR, the compound annual growth rate, is at an incredible pace. What really struck me, and which is also important for Spotify, is the percentage of superfans, and the percentage here is also increasing. Superfans are willing to pay more, they're willing to ultimately do more stuff to see their favorite artists, and in fact the percentage of music listeners who are superfans is also on the rise. And this is music to our ears, literally, because as we're saying, superfans do pay good money. So, hope you found this video interesting. Please do consider subscribing. These videos take good time to compile and I research in detail. And also, please give me your ideas of what you'd like to hear next. I'll see you next time.